maybe we could just start off with like a sort of quick biographical sketch of you. Like, how did you end up at Clear Street? You know, how were the things that you did earlier in your life sort of accumulate into you kind of ending up here? And why don't we start there?
Sure, sounds good. So I've been in the finance industry for close to 14 years now. So I started as a grad at as part of the equity risk and pricing system. So you could say I've been in risk for pretty much the entire career, but as a software developer, and that has its own interesting aspects to it. So you get to have challenges of distributed systems all the way through to working with traders at the front office that are very, very demanding. So I've seen the whole gamut of things, and what brought me to Clear Street was that right now in the market, a lot of prime brokers are still using very old technology, and we've come a long way on the technical front in terms of being able to do things like real-time processing of data. And one of those aspects is making risk available to our clients as fast as possible. That's not done right now in the market, and it was a great opportunity, I think, and that's one of the driving factors for why I joined Clear Street in the first place, to help build that type of platform out.
Yeah. You know, one of the things that I really like about working at Clear Street is that you have a lot of people that come from a lot of different industry sectors. So, you know, like a lot of the folks on our engineering team, as an example, Clear Street is sometimes their first exposure to working in financial markets. Yeah. And, you know, a common question a lot of people have is, you know, I don't really exactly know what a prime broker is. So maybe like for those, maybe just for the benefit of those folks, like Prime Broker 101, for someone who's just never even heard the term,
yep.
Like how would you describe it to folks, and like why it's important as a sort of part of the financial ecosystem?
Sure. So, I mean, when you trade at security, I mean, people just say, you know, I bought this many shares and I sold this many shares. There's actually a lot of process that goes on behind the scenes to make that happen. The actual delivery of the shares and the holding it somewhere in an institution, all of those things are just, you know, services that we take for granted, but that's the essential service that a prime broker provides. That's clearing of your actual trade and custody of your trade as well. Also, prime brokers need to make money off of that. So how do they make money? They make money by lending some of that security out to people. In the same way that you would borrow money to, you know, buy a house, that's the same mechanism by which a prime broker makes most of its money, by lending out securities at a small premium to be able to reap some of the, as you trade, some of the transactions get pushed back into the prime broker. So that's essentially what a prime broker does. It's to facilitate the trading process and also make it available, make it more flexible for a lot more investors.
And which companies are, you know, the leaders in the prime broker industry historically?
Yeah, so the big banks that you've probably heard of, the Goldman Sachs of the world, the Morgan Stanleys, have been in this business for a very, very long time. But having said that, yeah, those big businesses tend to target very, very, you know, high net worth clients that have, you know, basically it's the big boys club, right? And there's a plethora of people in the market that don't have those resources to be able to go to those big banks, and that's something that we can really take advantage of at Clear Street, and that's the main target audience is those investors.
Got it. So if I understand you right, you're saying that the really large banks have divisions in them that provide prime brokerage services, but they generally target those services towards the very large buy-side investing firms.
That's correct. Yeah. So many of them have, you know, long established relationships with prestigious clients, and to be a smaller player and trying to get into that field is much harder than you may think. And that's somewhere that, you know, usually they tend to go for offerings that aren't as broad as some of the things that we're trying to provide at Clear Street, and that could use some love. That market could use some love, and that's what we're here to provide.
Yeah, and like I guess like an example of like a big fund would be something like Bridgewater Associates or something like that.
Bridgewater Associates, like some of the big quant funds like Renaissance or Citadel would probably have long-established clients relationships with, like a JP Morgan or a Morgan Stanley or something like that.
But I would assume those are probably very attractive clients to have because they're so big, they trade so much, they need to borrow a lot. There's probably a lot of revenue, right?
Absolutely. I mean, our growth platform here is to try and take away some of that market as well. Eventually.
So if we're sort of at a stage right now where we're not really going after the really large, famous or prestigious funds, who is it that we are currently selling our product and service to?
Yeah, sure. So there's a big gap in the market for what you'd call, say, investment firms or hedge funds that have between, say, $1 billion and $5 billion AUM. AUM is assets under management. So you have the big boys, which are way above that, so 20, 30, and 60 billion in some cases. And this segment of the market, 1 to 5 billion, usually doesn't have enough resources within their own firms to be able to go and explore all the different options they have. They're looking for something automated. They're looking for something efficient. And that's the market that I think there's a huge gap in the market that is underserved by the current prime broker services.
Now, if the large banks already have the sort of underlying infrastructure to provide prime services, why don't they just go ahead and just add the small customers to their system?
I mean, frankly, it's old. So I actually, my previous role was at a hedge fund, working with some of these prime brokers to get changes done to make it easier for us. And our hedge fund, my previous one, was not small either. We had relationships with, some of the larger banks, and even at that stage, just to get a small change done takes weeks, even months. And that glacial pace is because most of these banks are still using technologies that are 30, 40 years old that haven't been updated, and they haven't really had the competition to push them to update. And by us bringing that to the market, I think will be a great benefit to the
I see. So if I understand it right, the job you had before Clear Street, you were actually working at a buy-side fund that was a customer of Prime Services. Yep. Is that right?
Absolutely, yeah. So, yep.
And I just want to make sure I was understanding what you were saying is, if I understood you right, you were saying that as a customer of Prime Services, there were certain things that you were requesting your Prime providers to do, and they either couldn't do it or were very slow to do it. Do I understand that right?
Yeah. As an example, if we wanted to change one of the reports that we get sent every day, like just a field in the report, that, you should think that should be a fairly trivial change that you can ask, and get it done in a week. Some of those changes took months to get done on the broker side.
Yeah, and you say that a lot of the large incumbent brokers, they have like this old technology, which means that they can't change a field in a report on a whim. Why can't they do it? Like, what is the technology? Why is it old? Why isn't it modular or adaptable or whatever the right word would be?
Sure. Yeah. So some of these technologies were built, say, in the 80s and 90s when you still had mainframe systems around. None of the internet hadn't even grown up yet. So the infrastructure itself is just a network within the bank. It's not exposed to the outside world as we do now, right, through cloud services. So that's probably the biggest bottleneck, is that the technology that they built works fine for that use case, but it's not adaptable and it's not easily changeable. And we've come a long way in terms of just like even distributed system technologies that we use today in not just banking, across all different industries. And that innovation has not yet been fully exploited in this industry. And I think that's what Clear Street is very much doing.
Got it. So if I understand it right, from a technology perspective, the real differentiation inside Clear Street is around building, a cloud native environment in a microservice architecture where a lot of the big banks are,
still running on mainframes.
not in the cloud running in monoliths. Is that
running
is that
monoliths?
basically right?
Exactly right. So running monoliths that are on mainframe systems that are very locked into proprietary technologies. I mean, you hear stories coming out of people, like software engineering specifically, coming out of banking, that don't have exposure to modern technology stacks because a lot of the banks are not willing to invest into changing that. Whereas we are building this from the ground up as microservice architecture, cloud native. The focus is on product with clients as the first class citizen. Like they drive the innovation and the change that we need on the business end.
Yeah. Now, I guess from a risk perspective, at a very conceptual level, I understand what the word risk means, and I could make guesses on like what risk would mean in the context of building a system that's executing trades on behalf of client requests. But maybe, for someone who's not that familiar with this space, like from a technical architecture perspective, like what is it? How does risk fit into that thing? Like what is risk engineering in the context of the business?
Okay, sure. So we'll go back to the example that I used of a mortgage. I'm sure you're very familiar with how mortgages work. You go to your bank, you put up some amount of equity in the first place, a down payment, and then they will lend you the rest to operate, to buy the house. It's the same concept at a prime broker, except that the amount that's being lent has to be monitored constantly. So you can think of it as we are doing a credit check on the investors on an ongoing basis to make sure that they are still worthy of the loan that we're giving them and that they are able to repay us. And at the same time, the trading activity they do changes the amount of borrowed funds, right? It's not like a mortgage where it's stagnant, whereas you're trading day to day, so you're going to affect how much the equity you put up and how much is being lent. So a risk system in its essence is just monitoring how much we're lending out and making sure that is not growing to a huge proportion that is too much of a bet for us. And that's essentially what all of the risk calculations we do boil down to. It's to make sure that the margin, which is the amount of money that the client has to put up with us to make sure that similar to a loan to value in a mortgage, is within a certain range for us. And every system so there are different ways to assess this risk, and that brings about with it a different set of challenges for how you compute it. At the simplest level, FINRA has a set of rules that say if you come in and buy this much stock, then you have to put up this much as an initial margin. And then on an ongoing basis, they have a set of targets, thresholds that you have to keep hitting. And that calculation is very simple. It's just a flow chart, and you get a number at the end that you send as the margin requirement to your client. On the more complex side, when you have a client that's trading a larger book, what we do is something called stress scenarios. So you basically take a client's portfolio and you revalue it by changing small things inside the portfolio. That would be things like the price of each of the securities in the portfolio, or the volatilities. So you're changing all of these aspects to see how that portfolio performs under worse market conditions. So that's essentially what you're doing. You're building up a matrix of different scenarios that you think might happen that could cause a downfall in that portfolio, and taking the worst case as this is what we think could happen if the market goes down tomorrow. So you need to put up this much in security to compensate, to make sure that you have a buffer to combat that scenario.
Yeah, that is actually very clear. Even for someone like me who's new to the industry, I followed that pretty well. So let me ask you this. So if you look at industry norms in prime brokerage around how risk is handled for, I guess, intraday trading that's happening by clients, what is the norm, and what is ClearStreet doing that is innovative on whatever the standard practices are?
Yeah, great question. So right now, the industry, like most of the time when you look for risk at a prime broker, they're going to give it to you at the end of the day. So they'll go through all of the trades you did for the day, run these calculations overnight, and then give it to you early in the morning. So for your systems to consume, or your desk, your trading desks to consume, and then make assessments on. But you can imagine that's a slow process, right? You want this quicker than that. You want to be able to.
Wait, I just want to make sure I understand that. You're saying that the way that the existing technology works in a lot of the large banks is they look at all the information on day one, and then they analyze it on the next day to decide what the risk exposure was from the day before?
Exactly. They do it overnight. So at the end of day one, they go through all of your trades and then calculate these risk metrics and then send it back to you at the beginning of day two. So it's not, in this day and age, you want that information as fast as possible as a client, right? And I mean, there are challenges to building it in real time like that, but that's some of the things that we're trying to tackle, to bring those calculations onto a platform that can do this as you're trading through the day.
Got it. So if I'm understanding right, the differentiation is basically real-time risk analytics on the existing portfolio you have out in the market.
Yep.
Where the current standard is next day risk analysis.
Absolutely. Yep. That's it.
Well, that seems like
it's
very valuable. If I understand it right, if you're doing next day risk analysis, if something is really happening in the present moment, couldn't you lose a lot of money?
Exactly. Yeah. You may be trading into something that you don't really want to, because you're going to be in a margin call the next day, and us being able to tell our clients that faster than a competitor is a huge deal for a client. And
so then, why don't all the big banks just build a technology to do real-time risk monitoring?
Yeah, I mean, they should, but it's easier said than done, of course. And like I said, the technology stacks a lot of these banks use have not, moved on to something that can consume data real time and analyze it real time. Like you can't think of your banks as like the Facebooks and Googles of the world. They're getting there, but it's going to take some time, and hopefully firms like ours will help us push that industry forward.
Got it. So it's almost like we're bringing kind of like Google level technology to the financial services, a slice of the financial services market where there really is no incumbent technology that is sort of operating in that way. Is that right?
Absolutely. Yeah. And that's a great point to mention. The diversity of the engineers here is precisely for that reason. We are bringing in people from diverse backgrounds to be able to, get their ideas from the Googles and the Airbnbs and Amazons of the world and bring those ideas into the prime broker business.
Now, do you ever find that when you're interviewing candidates that people are like very bored by the subject matter, or like are not curious about it or not interested in it? Like, I'm just sort of curious, like,
you mean they're not as interested as I am in this? Yeah, of course. Yeah. It's not the world's most exciting subject, but at the end of the day, it's crucial to get right, and some of those challenges are what keep people driving forward. And I think, it may not be interesting, but the challenges in terms of the technical side, I'm sure are interesting to a lot of people.
Well, I don't know like what's intrinsically interesting about a search algorithm, or figuring out how to get the exact right advertisement into Gmail, or trying to figure out how to get the exact right image into an advertisement into the newsfeed of Facebook. Like, I don't know if that is any more or less interesting than how capital markets work. In some ways, at least in capital markets, that's the real exchange of value between different economic participants on very high consequence decisions happening all the time, right?
Absolutely,
like facilitating our whole society. So in some ways, like, I feel like it's a little bit of just a sort of a question of like, what lens do you want to look at it from? But from a technology perspective, it sounds like the type of technical problems that need to be solved inside ClearStreet have very close analogs inside of any of the social networking or e-commerce businesses that are dominant in the tech industry.
Yeah,
Is that right?
absolutely. Yeah, I mean, it's the same challenge of process incoming data that you've got in near real time, and be able to make a decision based off of that data as soon as possible. And in this sense, the decision is really pass information on to your clients so that they can make trading decisions in a more informative manner.
Now, let me ask you this: to be a software engineer at Clear Street, say on the risk team, how important is it that the engineer is contexted into the business workflow to be able to be an effective engineer? Do you really have to get into sort of the business logic, or can you abstract yourself out of that and it's largely a sort of technical coding challenge? Like, what's the balance between those two things?
I mean, to answer that's a really hard question to answer, because in some contexts, yes, you need the business understanding to be able to make decisions even when you're writing the code. But in other things, like when you're setting up the foundation for a pipeline of calculations or something that's generic to anything that goes inside it, at that stage, it's really more about the technical challenge. So you can, depending on the role that you would like, it really varies. Like you can be really close to the business, and that at that stage, it is important to understand what you're trying to solve for and the product that you're trying to build. But at the same time, if you're at the lower level trying to build more of a platform for all the other things to sit on top of, you can stay a little bit. I mean, that's not to say you shouldn't understand what business context this is being put into, but it's not as required as say when you're working on a risk calculation with risk management. Say.
Yeah, that makes sense. Now, let me change gears and talk a little bit about sort of hiring philosophy and how you go about doing that. So, when you're meeting candidates and you're, interviewing them, what are the signs that you've really found someone who would be a good fit? Like, what are the leading indicators that you see in a conversation?
I mean, the number one thing for me is passion about what you're speaking about. It doesn't matter that if you're not working on exactly the same technologies as we're working on, but if you can speak to something passionately and back it up with evidence with what you're doing, that's the number one sign for us, I think. And that's been always the case for at least my principle when I'm looking at a potential hire, is just being able to assess like whether they actually care about the product or the system that they're building. And that comes through when you're talking to someone. That you know when someone has actually spent the time to understand the system in every little nut and bolt in that system, and that really comes across. Yeah.
Because a lot of people say passion, but I think when people say passion, they mean different things. Right. And it sounds like when you say it, what you mean is someone who completely walks around the problem and knows every little nook and cranny of it. And when you start talking to them about it, right, they are basically answering the questions from multiple vectors. And if you look for a certain area and you start drilling deep, right, they basically drill hundreds of feet into the ground rather than 10 feet, something like that.
Exactly. Instead of exploring the problem domain with the candidate at the time, they're able to tell you that they've already thought about all of this. Like that's the kind of insight I'm looking for when I'm talking to a candidate.
Got it. So basically depth and engagement with whatever the problem is that they spent the most time with recently.
Exactly.
Okay, so that's leading indicator one. What would be a second leading indicator?
And the second one would probably be like a passion for things like event-driven systems, more modern technology that people have. It may be very prominent in say the Googles of the world that people have looked at recently, and that's something that I look for as a second indicator is like whether they've. It doesn't necessarily have to be every single new technology out there, but at least one or two things that they've looked at recently that have piqued their interest. That may not be within the business domain or product that they're trying to build. That may be just general curiosity as well.
Yeah, I think probably another thing a lot of people wonder about, and I think if you're an engineer, it's a very important thing to probe at a company, which is what is the role of engineering in the company, and what is the lived experience of being an engineer at a company? Because, you know, there are some companies that are engineering led where, you know, engineers are the source of the ideas, the source of the strategy, they drive things forward, and they're, you know, truly first-class citizens. And then there are other company environments where engineering works more as a service function, you know, largely fulfilling requests and basically being jostled around across a changing set of priorities that all the MBAs are fighting about at the sort of business layer of the company. And, you know, being an engineer at company A or company B can be quite different. And, you know, just in your experience at Clear Street so far, like how would you characterize the way engineering sits in the business? And then how would you also, I mean, every individual has a different lived experience, but like in a by and large way, like what is maybe your lived experience in being an engineer at Clear Street and the people that you spend the most time with? How does all that function?
Yeah, I mean, we are trying to run this like one of the tech companies that are product minded, right? So thinking about prime brokerage services as an engineering product first and foremost. And so that really drives a lot of the decisions. And that means that engineers have a lot of say into what goes into the business that we're trying to build. Having said that, yeah, there are also areas where it's driven by, you know, risk management or other areas of the business. But I would say engineering in Clear Street sits quite at the apex of trying to make decisions and think about what products that we're trying to send out to clients. So just on that, for example, like I've been working to try and integrate into vendor products for one of the risk platforms that we're going to build. And my input into that is as important as, say, risk management's input. And we've had to, you know, say no to a lot of vendors because they just don't meet the technical requirements that we have, even if they have met all of the business and financial requirements, right? And so that's the kind of thing. I think it's really, engineers are valued and their opinions are valued in terms of the business decisions that are being made at Clear Street.
Yeah. Now, just in terms of risk engineering, you know, you and the team that works on risk engineering, who are the people that you interact with the most in the course of like doing your job?
Sure. So I would say two broad categories. One would be the product team and product engineers, because the metrics that we calculate ultimately goes into a product that our clients consume. So that's probably one of the main interactions I've had since starting. And the second one is the risk management team. Obviously, they are driving how the calculations should work. Like a lot of the test cases that we want to build up, or I spend a lot of time with them trying to build that up. And so probably speaking to them on a daily basis as well.
Now, what is the difference between, say, the risk management team and the risk engineering team? Like, how are those things in your mind distinctive? Like, why isn't it just a risk team, which is comprised of, I guess, risk professionals and software engineers working on risk systems? Like, what's the right way of thinking about that? And how does that function organizationally?
Yeah, sure. I mean, like the risk management team has a broader function in that they have to deal with clients on a day-to-day basis, get on the phone with clients to explain to them the different metrics that we have calculated and sent to, you know. So if a client is on a margin call, for example, and they need to put up some funds with us, they will usually have questions around why and what did they do to get to that stage, right? Those type of questions are handled by a dedicated risk management team. At the same time, that same risk management team devises the rules and the different scenarios that we need to calculate to send to clients on a daily basis. So I mean, you could think of it as one function. We could have one team that does both, but they require specialized skills. And risk management is more a people business, I would say, than purely engineering. Right?
I see. And then how do you distinguish? So then on the other side, you know, between risk engineering and risk product management, what's the relationship like there?
Yeah. So, I mean, inside Clear Street, we establish firm contracts for all of their APIs. So within the risk team, we have these are the different metrics that we're going to produce, and this is how you call them. And so those APIs are what, say, a product engineering team will negotiate against to get the information they need. But obviously, we collaborate on a daily basis to make sure that those contracts fulfill both of our needs.
Yeah. What are like common, like when you're talking to candidates, and let's say you find a candidate you really like,
yep.
What are but you're both trying to sort of work through the final details of whether there's a match or not.
Yep.
What are the common questions people have?
Yeah, I mean, the most common one I've had so far is about like what are the engineering practices like at ClearStreet in terms of how you ship code to production and things like that. And on that front, I have to say that ClearStreet is pretty much at the forefront of trying to get our CI/CD pipelines working as well as possible before we push code out. And that is all set up. If you're coming from, say, a banking world or a world that's not as mature in how you develop and then push code to production, this is going to be a game changer. The way we do it is it's very streamlined, and we have dedicated DevOps and infrastructure teams to help you with that process. And I think that's probably the number one question I've seen so far is like it's a financial services company. Do you have the same practices as, say, Google or Facebook in terms of how you ship code? And absolutely, that is number one on the list of what we do.
Yeah, it's cool. And then what about people who are trying to think, oh, well, if I go join the risk engineering team at ClearStreet, then I guess Arvind will be my boss. What's that dude like? And it's a little bit, I'd be curious to sort of hear your thoughts around how you think about career development for engineers, working, at a company like ClearStreet, how you go about, managing the risk engineering team, the sort of management hygiene practices that, you have, because, there's such a huge variation across people on how they do these things. Yep. And I'd be curious to hear how you do it.
Yeah, I mean, my management style, I would say, is very hands-off. I don't like to micromanage at all. I would generally like to give a project to a certain individual and then ask them to run with it, and then come back with design decisions or anything that they have blockers on. Yes, we'll come back with. I usually tend to have like one-on-ones every week with my people that I'm managing, and they can be short and informal. We usually just grab a cup of coffee and go over, not necessarily just work, anything in general. But I like that informal style of management instead of having like every quarter we'll still have those formal processes, but the ability for you to just come to me and ask a question at any time is key, I think. And I'm always available as long as I'm not in a meeting or anything like that. But I'm always available to answer questions and provide that dialogue when needed. At the same time, like I think just providing that project is not enough. I also like to set up things like we use what's called Notion and Clubhouse in ClearStreet to track projects through to completion. So that is something that I think a lot of managers don't like to be on top of, but I do. So I like that style of keeping track through stories or individual tasks that you're doing, and that way you get feedback without having to just constantly talk to the person as well.
Yeah. Maybe my final question for you is, prior to joining ClearStreet, you had a really great job working at, one of the most respected, buy-side firms, in New York. And, you of course left that job to come work at ClearStreet. I'm a little bit curious, like, how your recruiting process was prior to joining, and, what your decision criteria was, to choose to join and to leave, the good place you were already at. How did you come to that decision?
I mean, for me, I like I said, I've spent 14 years in finance. I really wanted to move to the pinnacle of technology in terms of actually building on top of a newer tech stack. And that was probably the number one driver for me. I hadn't heard of ClearStreet until earlier this year. So that was, and just learning about what the ClearStreet does through the interview process was, I think, sufficient enough for me to say, okay, these guys are actually pushing the envelope in terms of getting the latest technology stack into financial services. And I think that's where we met in terms of like what I was looking for and what ClearStreet was able to provide. Like, I was growing tired of like being pushed back to say, okay, we can't go to this technology, we can't do this right now because the business needs this done. Whereas here, this is the technology we want to use because it makes sense for the business problem. We can drive that forward, and that's probably the biggest decision factor that I had. I mean, having said that, there's a huge risk to going into a startup, but I think it can pay off as well, right? And you can help drive that, and that motivation was also something that drove me to join ClearStreet.
Yeah, cool. I think that's kind of all I have for now. I don't know if there were any other sort of final points that you thought were interesting to touch on or anything like that.
I mean, I've had a lot of fun the last few months that I've been here. Having said that, I mean, it's not an easy challenge, but it definitely brings with it a lot of fun, and the people that I've worked with so far have been absolutely brilliant. So I can't really fault anything that I've seen so far in ClearStreet.
Cool. Well, great, Arvind. I'm glad we were able to take some time to hang out and talk about ClearStreet and talk about risk engineering, talk about risk.
Yep.
And that was cool. So we'll see you soon.
Okay. Thanks, Elliot. Bye.